Hello, everyone, and welcome back to the Markets in Focus. I'm Razan Hilal, market analyst with Forex.com. Today is April 7, 2026. I'm going to run a 1 minute disclaimer in the background for compliance purposes before we go over key markets in focus today ahead of the deadline, which is near 8 p.m. Eastern Time between Trump and Iran over the opening of the Strait of Hormuz, which is keeping prices across key markets at extreme sensitive levels. So we'll be going over the Bitcoin chart, which is one of the leaders of the risk sentiment across the markets, followed by crude oil, which is also at a sensitive level, rippling out global inflation pressures, which are starting to be felt across the globe, followed by the US dollar index, reflecting that the increasing inflationary pressures and also expectations over a more hawkish central bank outlook. And after that, we'll be going over the impact that these movements are having over precious metals, gold and silver, and US indices, NASDAQ, and the Dow Jones. So the 1 minute disclaimer is up. And as I mentioned, we'll be starting with the Bitcoin chart from a weekly time frame perspective. We have three main key points that are keeping Bitcoin in this consolidating range above the 60,000 psychological zone, which is a neutral to a bullish zone, as Bitcoin chart is holding above and near the highs of 2021, which is keeping that relative 60,000 support. And it's also holding near the golden 6185 Fibonacci retracement of the overall uptrend extending between 2022 and 2025. And we also have oversold momentum at oversold levels last seen in 2022, yet we might have another potential extended downturn in line with the escalations that we are seeing in the Middle East, rippling out to global risk of sentiment. Now, last week we had increasing optimism across the charts, across precious metals, and across US indices, with hopes for reaching a potential ceasefire framework to be able to negotiate towards a definite war, a resolution between the US and Iran. However, the Bitcoin chart remained capped below the 75,000 resistance, which is still raising concern for risk of sentiment across the market. So we're going to need to have a clean close above the 75,000 mark to be able to have short-term bullish projections back towards the 90,000 zone. A close above the 90,000 zone is expected to extend these bullish projections towards the 100,000 mark, at the 115, and further towards 130,000, which can open the way towards long-term bullish expectations on Bitcoin towards the 150,000 and 200,000. Now, of course, this bullish scenario would likely be accompanied with an overall market resolution and risk-on appetite returning to the markets. Now, from the downside and where we're currently facing a higher probability setup is a probable close below the 60,000 mark, extending another leg lower towards the 56,000 first and the 48,000 next for a potential long-term distressed buying opportunity, as it also aligns with the lows of August 2024. This is for the Bitcoin chart, translating these fundamentals onto the crude oil. We're going to look at the crude oil chart from a 2 week time frame perspective. Now, we also have three key main points on the crude oil chart that is keeping the setup in the bullish outlook, which is the price hold above the 2023 highs, so above a key barrier, which is the 91 to the $93 zone. We also have a strong rejection from the $84 zone, which was followed by a weekly close above that mentioned critical barrier. And we also have the persistence of the price action holding near the $100 threshold for the sixth consecutive week, and as we enter the sixth week of this conflict. So over here, if we do manage to have a clean close for crude oil prices, over here we're analyzing WTI, US oil, a close above 110 would extend bullish forecast towards the highs of this year near the 120 zone, and the close above that extends bullish forecast towards the 135 to the $150 zone, and these levels can be derived and defined using Fibonacci extension tool, placed between the lows of 2020, of course minus the extended shadows, the highs of 2022, and the lows of 2025. Now, this scenario would also be likely in line with the escalation of this conflict and extended closure of the Strait of Hormuz. Now, in case we do have de-escalations in the headlines, it is also essential to confirm them with long-term levels to avoid any bull or bear traps. Should we have a clean close below the 2023 highs, so that is below the 91 to the $88 range, we can be expecting a shift to the downside, at least from a short-term perspective, possibly back towards the $82 zone and the $74 zone, which aligns with the highs of last year's Middle East conflict. And this is also another critical support. Should we have a clean close below this support, we can be redirecting energy prices towards longer term bearish forecasts once again back down towards the $60 range in line with the Trump administration's agenda. Yet for the moment, and in line with these escalations, and as crude holds near the $100 threshold, we still have upside risks in terms of energy and inflation pressures across the globe. Now, translating that onto the US dollar index from a monthly time frame, we have two main key points that are keeping the outlook on a bullish that are keeping a bullish outlook, which is the price actions hold above the trend line connecting consecutive higher lows since the lows of 2008. And we also have a double rejection from the bottom bound of that respected uptrending channel, which is taking the form of a potential double bottom pattern. So if you do manage to have a clean close above the 100.60 mark on the DXY, which also aligns with trend line connecting a price action between or since January 2023, we can have a steep bullish breakout on the horizon for the DXY, possibly extending to the 101.80 and the 104.40 and promoting extended or another leg of declines across major currencies and precious metals. Now, from the downside, we're going to need to close below the bounds of that uptrending channel to confirm a longer term bear scenario on the DXY, and that is below the 98 to the 97 price zone that can, on the other hand, lift bullish rebounds across major currency pairs and, of course, precious metals, gold, and silver. Jumping to the precious metals, looking at the gold chart, we're going to look at gold from a daily time frame perspective. We can see over here a similar pattern to the rejection that happened from the lows of February 2026. We had a steep decline for gold and then a steep rejection, followed by a trend line connecting consecutive higher lows, and then price action managed to drop below this trend line, promoting another steep sell-off. Now, where we are right now is we had a strong rejection of the March 2026 lows, followed by a trend line connecting consecutive higher lows, and we also have price action holding back near that trend line. Should we have a clean close below this trend line, back below the 4,600 mark, we can be expecting a drawdown to the initial support near 4,550 to the 4,490 zone. A close below this level would promote a steeper sell-off, possibly similar to the one we saw in March, aligning with the 4,360, 4,200, and 4,080 to the 4,000 psychological zone for either another dip buying opportunity or an extended sell-off down towards the 3,890 to the 3,900 zone and further down towards the 3,600 zone, which can also open the way for another steep rejection scenario. So this is the outlook on gold from the bear side. From the upside, should we have a close back above the 4,790 zone or the 4,800 mark, we can be expecting short-term bullish expectations lifting back towards the 4,980 or the 5,000 psychological zone. And the close below that exposes also another surge towards the 5,200 and 50. Now, closing above 5 to 50 will open back the longer-term bullish expectations towards the 6,000 threshold and beyond. And of course, this scenario would be accompanied with a weakness, possible weakness with the DXY. This is for the gold chart. We have a similar scenario on the silver chart, also with following the steep rejection from the lows of February 2026. We managed to also have higher lows, and then we broke another trend line. Over here, we have potential flag pattern that didn't reach its full pattern potential target potential yet. We managed to rebound off the $60 psychological zone, and we're currently capped below the $76 resistance. So now we're also having, we also traced a strong rejection from the March 2026 lows, and we had a price action respecting an uptrend an uptrend connecting consecutive higher lows, and we're back near that zone. So should we have a breakdown similar to the breakdown that we saw in the beginning of March, And in terms of silver, that would be below the $70 to the $68 range. We can be expecting price action to realign back with the 64.80 and the $61 zone for either another bullish rebound, another dip buying opportunity, or an extended drawdown towards a full pattern potential target, and that is near the $53 zone and further down towards the $48 zone for potential long-term distress buying opportunity, as the 48 to the $50 zone represents more than 45-year trend line extending from the highs of the 1980s on the silver chart. That is for precious metals. Last but not least, we have the indices for NASDAQ. We're going to look at NASDAQ from a weekly time frame perspective, where we had potential double top formation over here with a breakdown towards 22,800, and price action is now holding near the neckline of that respective formation below the 24,300 zone. So closed above 24,300 would disregard that double top setup and redirect prices from a short-term perspective back towards 24,600 and the 24,900 zone. A close above that would promote further gains towards the 25,500 and 25,800, where we can either have another pullback risk or a bullish extension towards new all-time records towards the 27,000 threshold. Now, so far with the escalations that we're seeing, and in case we do not have a deal by tonight, I'll be watching the 23,500. Should we close below that, we can revisit the 22,800. That can open the way further towards extended drawdowns down towards the high seen 2024 and near the 22,200 and the 21,800 respectively for potential long-term dip buying opportunity on the Nasdaq chart. Scenario similar to the double top seen in April 2025, yet possibly replicating itself onto April 2026. Last but not least, we have the Dow Jones chart, which gave way towards steep declines for this year. Looking at it from a monthly time frame, we had the Dow Jones consolidating, contracting price action, consolidating into a potential diagonal following its bullish rebound from 2020 lows. And as we reached the upper edge of this diagonal, which was near the 50,300 zone, we had that steep drop aligning with the 2024 highs. This is where we had the latest bullish rejection for the Dow Jones. Should we have a clean close below the 44,900 previous highs of 2024, we can be expecting drawdown towards the lower bound of this consolidation near the 43,000 and the 41,900 for potential dip buying. If not, if this gives way, we can be expecting a steeper drawdown towards the 39,600 and the 36,000 zone lows last seen in April 2025. For the upside, we're going to need to clear the 47,300, 48,000, and the 48,800 to redirect price action back towards the upper bound of this consolidation for another retest of the 50,250 to check whether we're going to have a clean close beyond the bounds of this consolidation, at least a monthly close, to be able to redirect a price forecast on a longer term, back to longer term and new historical highs on the Dow Jones chart. Thank you so much for watching. I'm going to insert the disclaimer once again on the screen. Thank you for watching. Happy to take any questions. You can find the recording of this webinar on our forex.com and our YouTube handles. Thank you.